So tonight we're going to be talking about Texas land. We've kind of been building to this over the last, few webinars. We've talked about kind of the state of the market and, we talked more about emerging technology last month. And then we did have a newsletter that we sent out that kind of talked a little bit about this as well. So we wanted to go more in depth with a webinar tonight. And before we get started, I got to do kind of like the disclaimer language. This is a webinar that will end up being recorded and on YouTube. So if there's any concern you have about that, just message me. We can edit around. And as always, this isn't legal or financial advice, just for educational purposes only. So, one of the things that I know we've heard from investors or prospective investors lately is a lot of anxiety. This idea of what should I do with my money right now? Should I put it under my pillow? Should I put it under the mattress? Should I invest in gold? What should I do? And one of the things that I actually looked into while I was putting some of this material together is, even gold, which tends to do really well in uncertain times, did have like a recent 20% decrease from its peak, which is kind of unusual. And it's due to a number of factors, but I won't get too in the weeds about that because this webinar isn't about gold. But what we wanted to do is kind of talk about where else you might want to look to diversify your investments and talk about whether land is a good bet. And if so, where do you look? Maybe you can find a happy place of your own. So that's really what tonight's webinar is about. And I'll let Al take it from here. But if you've got questions or comments, I'll be watching the chat, happy to field anything. And, feel free to ask questions as we go.
Awesome, Sammy. Appreciate it. And hello, everyone. Good evening. Thanks for joining us for tonight's amazing webinar. We have a bunch of beautiful Texas pictures that Sammy has collected, and they make Texas look different to a lot of non-Texans. But for us Texanians, we know we know Texas well, and we know all the secret places in Houston and around. Um, the this picture is so funny because I had so much happening last couple of months from the investors' questions, anxiety, like Sammy mentioned, and a lot of people just wanted control because everything seemed out of control, globally, nationally, wars, market, what have you. And a lot of investors are like, hey, can I get my money? When can I get my money? I want to control. I'm like, what are you going to do with it? I'm going to put it in gold, or what are you going to do with it? So we're not having like rational conversations around investment. It's more like, I just want control right now, and then we'll talk about it later. So it was kind of interesting to see that. And we were always kind of, I would say, pivoting into more sort of wealth preservation investments over time, especially in this turbulent time. And it was like, hey, if you take your money out, here's some considerations. Have you invested in gold? If you haven't invested, it's still okay to put your money in gold. Still okay to look at silver. Still okay to buy land. Still okay to have some real estate properties. This is a buyer's market, so you may double down on that. Even in stocks, if it's dropping, continue to cost averaging. Don't freak out. Don't do major decisions. That's kind of the main advice that we gave everyone. But it was interesting to see people just react to the market, and this happens in every cycle. So it was a good kind of reminder for us from the reality of the market from our investors' point of view. So today we're going to talk about Texas land specifically. And we believe it's the next gold rush, and we'll tell you why. And you be the judge after you see the data that we collected. We're obviously biased. We're in Texas, and we're staying in Texas, but hopefully some of the data will convince you that Texas is a new golden state, and it's a new gold rush. And we'll talk about the difference between land development versus general commercial real estate. We'll talk about why land development is the ultimate value add, why it's a good option of investment today, and how we're trying to de-risk some of those by creating a land fund and working with our investors in a more diversified point of view. But we'll cover some data points today. Please keep the chat lively. We'll open the mics at the end of the call as well for additional Q&A and more comments from your side. All right, start with why Texas. Well, Texas is all about the growth. If you ask anyone who have been in Texas 10 years ago and today, it has changed. And so what does that look like? Texas in 2025 have added 500,000 of migrants. This is a new population coming to Texas. We look at the data from different angles. It is the fastest growing large state in the nation. We have a lot of West Coast and East Coast people moving in, and for good reasons. I happen to live in 77433. I read the local magazine or newsletter every month, and it happened to be the fastest growing zip code in the nation last year, and I think it's going to continue to grow. Now, this is Cypress, Northwest Houston. The Northwest is the area of growth in Houston, into Waller County, into North Katy, into Montgomery County, and going north. So I was kind of surprised, but not really, because they built thousands of homes in our neighborhood in the last 3, 4 years. Obviously, we have the Texas Triangle, and every city in Texas has its own, especially the major ones, have its own economic drivers. So Dallas growth is different than Austin growth, is different than Houston growth, and San Antonio growth, which is actually the fastest growing city. I think last year it was kind of interesting. But every city has its own growth factors and fundamentals, but they're all growing. So that's the good news. Everything is growing in Texas. North Dallas, North Houston, Northwest Houston, um, Austin on the tech side, San Antonio have different fundamentals as well. So the triangle in general, and Austin and San Antonio are becoming in one city almost. So that triangle is still the top in the nation. And we see it from like basic information, like how many new Texas driver license do we generate every day, every week? U-Haul bookings. People are really moving in, not just from a population maybe or even employment point of view. There's different reasons, and all of these economical reasons lends itself in real estate. So you start seeing that translating into real estate. So economic drivers of Dallas might be different than Houston, but they're growing. So you'll see the buy and rent trends have different shapes, but overall, home buyers in Texas are more attracted to suburban and rural areas, especially after COVID. The CBD concept, central business districts, I want to live in the loop. That's nice, maybe for younger generations and the Midtown, the Montrose phenomena. But after COVID, the explosion on the suburb side and the rural areas is crazy. There was a lot of multifamily development anticipating that new growth, but there were also a lot of new home buyers as we shifted through the markets in the last 3, 4 years. So multifamily grew on the residential side, but also home buying grew until homes became less affordable. And then now we have new phenomena of BTRs, built to rent communities that are sort of bridging multifamily and home buying. After that sort of big wave of supply, everybody was like, "Oh my God, did we build too many?" And then, believe it or not, that's demand caught up quickly. So that's what's crazy in Texas. You have a lot of swings, but they happen really fast. So like supply and demand chasing is super fast. So, the only exception might be offices. We probably need another decade in Houston to fill up all the office buildings. But other than office problems, everything catches up really fast. It's kind of like violates some of the real estate development, urban development rules because how fast things are moving. Like we move from urban to suburban to rural in no time. And like especially when you look at rural agriculture that are becoming neighborhoods within like 2, 3 years. In Waller County, I mean, it blow our mind in Houston. It's like we used to visit those areas and maybe there's a couple of factories that had nothing around them. And now there's entire cities in Northwest Houston serving that market. Same thing in North Dallas. We have a project in Melissa, Texas that used to be way out there. Now it's like McKinney. And McKinney was a little town some 10 years ago. So you see like rapid development and rapid demand catching up to that rapid development. And a lot of people are buying Texas land. And I'll show you another graph to show you the growth in that market or that phenomena, if you will. But we have now Senate bills on the floor preventing foreign nations from buying Texas land because they're buying Texas land everywhere, whether under a U.S. citizenship kind of ownership or through a proxy. But it's happening, and it's happening to a point that we're trying to prevent some of that at a state level. A little bit of Houston growth specifically. I mean, Houston has always been growing. There's different waves, the energy wave, the medical wave. Obviously, we have the ports and the trade that's always hot. But we're almost 8 million people in the metro area now, and that's the third largest city in the US, surpassing Chicago. And then Dallas Fort Worth is coming in as number four and probably going to surpass Houston soon, combined. So you can see like it's happening everywhere, but also you can see specific pockets where it's really exploding in the next couple of decades. On the northwest side of Houston, North Houston, a little bit on the south west as well. And there's gonna be another loop, Highway 99, closing the full circle. Look how many loops there is in Houston. It just shows you how much growth we've seen. Also, like in a more like maybe a little bit looking into the future, every city was concentric growth in the past, and commute was a problem. And yes, Houston has bad traffic. Believe me, I don't leave my house before 9 and try not to get home after 4 p.m. But nevertheless, the commute phenomena has changed. A lot of um, headquarters are building satellite offices. Houston is like 8 cities in one, and every corner of Houston has a satellite office of one of the big corporates right now. And so there's a lot of satellite offices happening. Obviously, working from home is here to stay despite the HR efforts to bring everybody back in the office. So despite the ugly traffic of Houston, we're seeing different behaviors in terms of home buying. People are going way out there to buy a nice house because they have power and they have internet and they don't need to commute and they have their local communities to sustain them. Maybe in the future they can sustain themselves and even go more rural, but we're seeing areas that historically didn't make sense in terms of home development. It's like way out there and they're still doing it to the point that, again, it's violating some of the urban development. Like, typically it's a highway and some feeder roads, and then you have some retail and gas stations as you're getting more and more rooftops. But in some areas in Houston, rooftops are ahead of everybody else, and like commercial is barely keeping up. Like I was in Waller County the other day, and they don't have gas stations in some of the areas that they have already like 3 or 4 neighborhoods built. It's insane. That's how fast things are moving in Houston and Dallas as the top two cities of growth, really. Okay, so business friendly. We always hear about that. It's laws, regulation, red tape. Texas don't have any of that. We have a lot of headquarters of Fortune 500 companies. Texas officially has the highest number nationwide. Houston is the second most popular city behind New York City. That shocked me. I thought Dallas was number two or would be at least on top of Houston, but Houston is. Again, energy focused early on, trade, logistics. And now we have Texas Medical Center 3. phase three, and there's a lot of health science headquarters are moving here. And a lot of technology also moving here to because Austin became so unaffordable that they have a lot of satellite offices here, and sometimes companies elect to move to Dallas and Houston instead of, unless they're like a tech startup, they move to Austin kind of thing. 26 out of 55 headquartered in Texas are in the energy sector, so still energy heavy, but the word is energy, not oil and gas anymore. So there's a lot of climate tech, there's a lot of renewable, there's a lot of new energy, the green energy. A lot of oil and gas companies are changing their colors to green these days as well. Dallas is in the top five with 11 500 headquarters, 11 Fortune 500 headquarters. Dallas is like I think the number one thing in Dallas is they're very good with employment in terms of like the skills, the caliber of skills, the quantity of highly skilled employees. It attracts every headquarter to consider Dallas. They have a nice airport, they have nice logistics, but it's really about skills. They have advanced skills and they continue to build on that. So any headquarter will be like, Dallas? Why? Obviously tax breaks, and then employment. I remember I tried to convince people to move to Oklahoma City out of Dallas of like, why should we move? Can we work remotely? It was the hardest thing to do because there's just so much opportunities, but also there's so much talent in Dallas. And so Dallas continues to be a great magnet for headquarters to move there. Tax breaks, regulations, and employment. And the proof is they gained 100 corporate headquarters in the last few years. 100. It's insane. Austin, obviously, was the tech hub, was supposed to be the San Francisco and the Silicon Valley of Texas. I think it's happening over a longer period of time than what they anticipated early on, but it's happening. There are some um, corrections that are happening in Austin. The houses went nuts, and now they have a 30% correction on the housing. So if you want to buy houses in Austin, this is a time. But at least it's still kind of building momentum on being a tech hub, having tech savvy employment. And they brought in other headquarters. Maybe they like Austin because of the vibes and the hills and the mountains. But you got SpaceX there, one of their biggest testing facilities in the nation. And eventually they moved the headquarters as well. And they're just doing all kinds of I would say investment in power plants, in warehouses, in buying additional land for future growth. There's a lot happening in the Waco Austin corridor. The next big thing, which actually surprised me about 7 or 8 months ago, is the majority of data centers in the nation in the next decade will be built in Texas. You would think Texas is a border state and it's on the water, and it may not be wise to have all the data centers and the AI centers in Texas, but it's happening. And it's happening because of power availability, water availability, tax regulations, but again, employment skills. Data centers are specific animals that requires different skills, different landscape, water, electricity, and Texas provides that. Despite that, our grid is isolated for the rest of the nation. A lot of tech companies are electing to build data centers in Texas. It's kind of insane. Obviously, a logistical hub, so we have a huge industrial growth that is happening in Fort Worth area, south of Dallas, south of Houston, on the Highway 8 corridor, and now going into the north side as well. So industrial is massive, data centers is massive, and we're talking the next decade still. Why? Talked about the available land, relatively cheaper to do business here, less regulation, power, etc. Central time was interesting. We're in the middle of the nation time-wise when it comes to computer clocks, I guess. And we have wind, despite like everything they tell you about wind and solar, we do have wind and solar actually. And it's growing. It's growing even further. Um, Even on the high tech, there's chip manufacturing happening in Sherman, happening in Austin, and Sherman is almost borderline Dallas right now. So we see the huge growth on 75 corridor. There's a lot of nearshoring initiatives, bringing back some manufacturing or at least last assembly manufacturing. Cold storage has been always great. Last mile fulfillment. This is a national phenomena, but Texas is taking the lead there. And we have a lot of recently Tesla has built a couple of big manufacturing facilities for their battery manufacturing. So a lot of new whatever they call them, mega centers or whatever they call them, for battery manufacturing. So you get the good old oil and gas and trade and ports and logistics and big airports and highways, but you also get the high tech, health sciences, etc. So again, real economies. It's not all tied to AI, but we still have AI as well. And how does that translate into what we do or what the real estate market does is like you need to serve all of these. The mixed use development, the live, play, work type of thing is happening in Texas. We're bringing the retirement towns, historically in Colorado and Florida and California. Now we're building more upscale senior housing in Texas and Oklahoma too. Obviously, medical offices building. I mean, the Texas Medical Center is the biggest medical center in the world. It employs 100,000 people alone and surrounded by all the adjacent businesses and vendors and all the growth around that. Um, so there's a lot of things that are kind of just we're going to serve these industries, we're going to house these industries in terms of industrial buildings, data centers, and then everything normal retail, which is retail, office, and continuous growth on the residential side.
Esmont asked a really good question in the chat about if Investream would invest in data centers. I know we've talked about this
I know,
in
I
past
know. I would
webinars.
love to. I would love to. So back in the days when I was in the GE days, I used to work in data centers, and I would love to develop data centers. They're just outside of our buy box and our sort of our size in our journey, but we would love to develop data centers, and I believe we're going to catch up to that decade worth of development going forward. Typically, data centers are in a 50 million plus type of investments and requires niche GCs, mechanical, HVAC. So it's not our expertise today to build them, but I would love to do something in the next couple of years. Great question. Yeah, we try to do everything except data centers at this point. Yes. All right. So I told you a little bit about the economy, so I'll just double down on, how Dallas different is than Houston, but they're kind of the same. They have economic drivers, huge migration that drives a different phenomenon. So North Dallas, you know, it's it's moving like crazy, residential wise, highways, but we actually see problems with permitting in Dallas. It's mud districts, permitted, what do they call it? Zoning. There's more red tape in Dallas, despite the huge growth. Houston, Wild West when it comes to zoning. You can do whatever you want. It's great. But we don't have the same economic drivers. We still care about affordability more in Houston. We still care about making sure that we don't become a renter's city. And there is a lot of blue collar in Houston more than Dallas. So it's everything is growing, but you have different nuances to how things grow and how flexible these cities are to accommodate this growth. All right, moving on. I kind of alluded to how we react to these phenomena happening in Texas. We buy land in the city outskirts, surprise, aiming for the middle ground. We're not aiming for agriculture, urban long hold per se. We're aiming for the areas where we see rapid growth, where we can actually do land development relatively fast and generate returns for our investors. In Houston, that is the north side, northwest, a little bit up past Rosenberg on the southwest side, and the new Highway 99 on the south side that is coming soon in the next few years. So we're now even south of Manville is where we look for in Houston. In Dallas, it's north. There are some huge growth in the south side when it comes to industrial, but we love the north side. It fits our buy boxes when it comes to BTR, senior housing, flex space, industrial, medical office buildings serving these areas. We're not into big box industrial, otherwise we would be looking into South Dallas as well. All right, so let's talk about why land development. Land development is the ultimate value add. If you look at like the food chain of real estate, a lot of people start with like wholesaling. That's like the entry point. And then maybe fix and flip, and you buy some homes and keep them and generate some cash flow. And then eventually you'll maybe buy a few more, and then it'll be like, why do I have 200 homes? Maybe I should buy an apartment. And then from apartment, you be like, hey, maybe I'm a commercial real estate developer. Ultimately, everybody graduates in land development. So land development is the top of the food chain. Real estate in general is developed by economic drivers, but the way you look at real estate sometimes is different. To the McDonald's story, for example, a lot of businesses come to certain places. The McDonald's story, the Walmart story. Walmart used to buy everything around them, and then they put the store, and everything around them becomes a lot more expensive. And so there's like city roads, highways, main drivers, and you have businesses that kind of make things more valuable. And a combination of both allow us to do land development faster. So the way we look at land development is like, hey, we're going to anchor it with something. And then this anchor is going to drive more value creation for the lands around it. So we follow the city growth, but we kind of sort of manipulate the growth as well by anchoring things ourselves. So land development becomes a huge thing once you kind of mix the ability to buy land, develop land, but also anchor it with other real estate development. The other thing about land development, it used to be very slow. You would buy and hold for a decade. You're anticipating where the highway is going to come and where the new roads are going to come, and you're just going to sit on it. And eventually you'll make a lot of great money, but the phenomena that I was just describing in Texas, it's now everything is shortcut. So what used to be a buy and hold for a decade is now maybe 3 to 5 years. I remember when I bought my house, Highway 99 just opened. Guess what? They're expanding it to 3 lanes and it's not going to be enough already. And so it's kind of funny. You look at the highway and there's going to be 3 lanes and they're going to work on it for 2 years. And we know already 3 lanes isn't enough. And so the pace of demand is making land development more of a commercial real estate proposal for our investors too, because we can land develop sometimes in 6 months, in 12 months, in 24 months, what used to take us 3, 4, 5, 10 years. And so land development become a lot more active and a lot more faster to realize. And that will allow us also to continue to mix vertical and horizontal development now that they're kind of interconnected. There's a lot of tycoons who are buying land in Texas. I mean, you always hear about Bill Gates and buying all kinds of agriculture. That was like the old style, which is just buy agriculture land and sit on it and see what happens in the future. But now you see a lot of corporates buying pieces of land that they're going to develop on within the next 5, 10 years. So, for example, I believe Chevron is coming to the northwest corner of Houston. Houston Texans just bought 70 plus acres to move their training facility into Cypress. And they're going to build mixed-use development just because. So they're going to have hotels and retail and watch parties and all that fun. And my anticipation is they're going to actually relocate the stadium in this area sometime in the future. Now, sometime in the future used to be 10, 20 years. Like, the Kansas Chiefs Stadium was in the middle of nowhere when they built it. in Texas, there's no middle of nowhere in 5, 10 years. So I think it's a step into that direction, but just kind of shows you how big corporates, NFL teams are buying pieces of land because they know they're going to develop it sometime in the future. We Investream started looking into, okay, we're gonna do a lot more land development. Our investors are used to one project or a portfolio project, so why not start a land fund? So I want to just touch on a little bit what is a land fund and what are the models that we use in a land fund. But basically, what it is, you we started the fund and we buy multiple pieces of land. So we're diversifying the risks for our investors, participate in multiple pieces of land, and you're owning a percentage of these pieces of land. So all the headache when it comes to deeds and titles and ownership, all of that goes away because you now own 1% to four, five, six pieces of land that are about to be developed. So that's one. And there's multiple ways of like doing land development, and we're doing all of three. The first one is quick flip. Again, the need for speed that is happening in Texas allows us to do quick flips. Sometimes you buy something cash, you divide it or not. You may just flip it and then you divide it and divide it on paper. And that's just work with the city and the permitting and the platting. And then the full one is no, we're going to actually horizontally develop. We're going to put the streets, we're going to put the utilities in, we're gonna be selling it in square footage. So you buy it in, we say we buy in acres and sell it in square footage, or buy wholesale and sell it retail. But it used to be that you do land development and maybe you sell it to home builders, maybe some industrial users. That was about it. Now you can actually make a lot of money just stopping there. Like you don't need to go beyond um, every developer in the past like used to make their money in land, but they would still do the vertical. And I say every, it's most of the developers. So like if you're doing like an industrial business park, you would buy acres and turn it into a park of actual vertical buildings for lease and sale. Same thing on the suburban office parks. The only exception was to buy land and divide it into like residential work or residential lots for home builders. Now, actually exiting at the development stage makes a lot more sense again because of the speed and because of the ease of entitlement process in Texas, generally speaking. But in our land fund, we're thinking about the three models focused on full horizontal development, but every once in a while you'll have an opportunity to just divide the lots and sell them as is, or a quick flip. And the time horizon for each is different. Quick flip can be 6 to 12 months. Paper entitlement can be 12 to 18, and horizontal development can be 18 to 36 months. So they're still relatively short in terms of land. So every time I talk to an investor about land development, they think 10 years. That's a natural reaction that I get out of them. Like, I don't want to hold my money for that long. And this is where like land becomes more like gold, because gold advantage over land is it's liquid. You can sell it quickly. You can exchange it. It's a currency in a way. Land, you're stuck with it. That's the general notion. But everybody who made wealth in the history of human mankind became a landlord, right? So the only thing different here is just the pace and that you can actually preserve your money, put in it in solid ground, and actually make returns. So typically people think in binary session, meaning fashion, you think I'm either preserving my capital, putting it in say gold, to avoid inflation problems, or I'll develop something to generate returns. We believe land development combine these two worlds, especially in the next few years, especially in Texas, where you're preserving your capital in a semi-liquid asset, but you're actually still developing and creating returns. So you're preserving and generating value at the same time, which is why we think land is the new gold in Texas. Here's one more data point that shows you like how crazy it's become buying agriculture land in Texas from 2010 to 2018-ish. It was pretty flat. And then you get COVID and you get inflation and smart investors. A lot of foreign investors are very smart, even if they don't like sometimes working with the US, they continue to buy in the US everything. They buy stocks, they buy land, and this is agriculture in Texas. I think this is in the US, but Texas is the same phenomenon. I told you about like the new bills that are trying to slow this down. Historically, real estate outperformed gold when it comes to returns. You see certain areas and then peak inflation, and this data doesn't capture what happened, the craziness that happened in the last few months. But you would see the same phenomena where gold exceeds real estate short term. This doesn't probably apply to Texas land, but applies to commercial real estate. And people are making money owning gold, which is kind of crazy to say. You're supposed to protect your money, put it in gold, but not make profits. And then we see the same phenomena here. So if you put the analogy of land, land is now in a place where if it's not growing in value, it's flat. But if you're developing, you're actually creating new value. Everything else, like it's a buyer's market when it comes to commercial real estate today, meaning some properties are going negative and it's a good time to buy, but land never goes down. It's either flat or keeps going up. And in Texas, it's definitely on the upper curve. All right, I'll finish with land development is top of the food chain, which requires more maturity, requires a better team, a more sophisticated team, because you're now applying all the fundamentals in real estate all in the same time. You're looking at where is the population growth? You're looking at, is this residential? Is this going to be fit for industrial? Is this going to be fit for mixed use? Can we actually develop the land and be ready for the next wave of development by home builders and other things? So when it comes to land, it took us a while to grow into it naturally as we started doing different verticals, different asset classes, and land is now where we're doing it naturally because as we're building industrial warehouses, parks, we are now into land development naturally. As we're building more residential, built-to-rent communities, 55 plus, senior housing, we're naturally becoming more and more land developers ourselves. And what we learned over the years is making sure that we have a more sophisticated team, a diversified team. Not every opportunity is the same. Where we've created over the years approved vendor list for every size and every asset class and every usage. That's very critical because they come in different sizes, different expense profiles, maturity profiles. You can't put a data center GC on an industrial warehouse. Totally different world. Think about what you need to unlock the value in the land. This is where the creativity kicks in. Like, do you have a vision for that site of what it can be? Can you actually beat others to see how you can unlock value in that piece of land where others are not? And this is crazy, but sometimes we're like, how does people not see that we can do this in this piece of land? And then once you start putting the plans together, everybody else jumps in and try to mimic it or trying to build on it. But it takes a different eye and a different experience to see what the land can be. Um, I was amazed when I moved to Houston some 10 years ago to see how they actually build the subdivisions. I mean, someone like Howard Hughes, empty land, boring, nothing in it. And then all of a sudden you have hills and trees and ponds. Most of it is because we flood and we need to have big detentions. But you have literally, it's almost like the Dubai phenomena already happened in Texas before Dubai was a thing. It's like they reinvent what the land can be uh, topography wise, utilities, put in those anchors in, and you come 10 years later, I'll be like, you go to what's that town? Prosper in Dallas. Used to be just nothing. It's just agriculture, farmland. And now it's like you go to Prosper, and it's like it's great to buy a million two house and Prosper. I'm like, seriously? Like, what happened? Like, all this happens within like couple of trips to Dallas. Like, I would be not going to Dallas for 2, 3 years, focused on Houston, and then I'll go to Dallas. I'm like, what happened here? Since when we have a soccer stadium here, or since when we have this anchor here? And it takes a different eye and a different vision to do land development, but there's a lot of value to be unlocked in land, which is not like the rest of vertical commercial real estate. It's kind of like the formula is set, everything is optimized. You build this, you get this, you build this, you rent like this. Land is a little more creative and flexible. And then understand the incentives of the other parties. Are you working with the landowner? Are we doing a seller finance? Did they inherit the land? Are we fulfilling their dream of what their land that they inherited wanted it to be? Sometimes we work with the owners to make them partners in the deal. Sometimes we kind of try to convince the city that this is a great thing to do. The city of Edmond is known for this in North Oklahoma. It's like you have to convince the city that this is a great project, It's not just permitting and zoning. You have to convince them this is a cool project. And they'll tell you, oh, we don't want multifamily. Okay, what do you want? We want senior. Okay, the senior doesn't math up, but how about if we do this or that? So you have to kind of work with the parties. You have to work with the mud districts, with the municipalities, how we're going to get water, how we're going to get utilities, what money can we inject to actually have that. Maybe like we have the Melissa project, we actually invested in the infrastructure on behalf of the city in exchange for them to give us a widened road, for example, that will give us a massive access to the highway. So you get a lot of these unfair advantages once you understand the incentive structures of who you're dealing with, whether it's a GC, the city, the district, the municipality, and this is where I always talk about land development. You need to be in the inner circle. You cannot be an outsider looking in. You have to be in it to see where the value can be created, the shortcuts, the win-win situations. And so if you want to do land development, those are my four advices: is prepare a bench of different players who are fit for purpose. Make sure you train your eye to do some creative value add, and stay engaged so you can see the win-win situations where others don't. And with that, I will open it up for questions. Energy doesn't have a name anymore. Yes. There was a huge debate. Are they going to spend 1 billion or 2 billion to renovate or not? After they move to Cyprus, my prediction, maybe we'll put this on Kalshi, is Texans eventually move to Cyprus. We'll see. But definitely they're not, I don't know, they're not spending big money on the Energy Stadium. I think they're just trying to do the World Cup, maybe a couple more years, and then there's maybe a different plan in the works. At least that's my Kalshi prediction.
Hey Al, can you hear me?
Yes, I can. How are you,
No.
bud?
Good, good. Thanks for hosting this again. Hey, I had an idea about something where I kind of wanted to stress test a little bit with you, but also go in line with the data centers as well as the idea for flex space. So one of the biggest issues with the data centers is that as of 2026 so far, over half or just about half have either been delayed or they've been canceled. And I think a big part of that is because of the local city councils, the municipalities that are stopping that within their town meetings. But then also that on top of that, the amount of water, the cost for construction, everything within that. There's a lot of maybe unforeseen obstacles that they're running into. And so one of the ideas that I was thinking about over the last few days is maybe if you can scale down a data center into the idea of like a flex space area, because I think with the future of AI, while these massive AI companies are having a huge grip on where they're going with it, I think a lot of these decentralized AI models are really coming up to speed on how effective they are. And I have to wonder because they're so much more cost effective, but also they're not like mythos or anything like that, but they're capable. And so I have to wonder if the market is going to start tailoring towards these smaller models that are more cost effective, and how you can play that within like a flex space situation is maybe you can set up a mini data center that houses information for these smaller models.
Hmm.
And it facilitates to businesses in that area for when businesses start to really capitalize on what AI is capable of. And I was
Awesome.
just curious, like, what you think about that for stress tests. I feel like I'm missing a lot of variables there, but I think that
Yeah,
could be
no,
a
I love your vision. This is definitely revolutionary. I would just analyze, just put an analog to it, right? What happened in the Uber phenomena, right? It's distributed taxi. You don't need to own your car. You don't need to open a taxi cab, so same idea. We have co-working spaces in offices. We have co-working spaces or co-locating spaces in retail. We have food courts now with shared spaces. We have flex spaces. That's what I call it, the shopping center of industrial, right? So I can see it. I can see it coming. Typically, I don't like to pioneer. I like to be second in line, generally speaking. That's my style. Someone needs to pioneer it, and then I'll be second in line. But I can see it. It's kind of like co-host, co-data centering, if that makes sense. I can see us building a big and massive industrial tilt up with nice AC and power and all the things that a data center needs. But you rent a shelf. It's kind of like the good old data centers, but a lot more efficient now. AI efficiency is going crazy. The hardware is going to get cheaper. Um, and data centers are going to shrink, or you can host more with it. So I can see it. That's a little pioneering. I can see it. I'll give you a couple more ideas that are pioneering in my head. Building neighborhood-based backup power, because in the nation, we're not gonna have enough grid for all this craziness. So Texas are so proud, and we're gonna bring nuclear now, and we're gonna bring this and that. But you know what? We're not gonna have enough power. So how about maybe neighborhood backup generators? Instead of waiting for Generac service company to for 12 to 18 months to install the stupid generator at your house, and everybody's gonna fill up their diesel, everybody's gonna maintain their generator. How about a subdivision generator? Maybe you fuse that. There's a lot of cool ideas that I think we're not even comprehending right now, but things are moving too fast that an idea that seems way out there might be realized much sooner than we think.
yeah, yeah. I think that's more applicable too for Texas because it's an independent grid, and maybe there's a little more flexibility with how that can be implemented. Cool. Thanks for the insight.
Agreed. Agreed. Yeah. Appreciate it. What else? Did I miss any questions, Sammy, earlier?
No, just a lot of chatter.
Nice. Yeah, I thought it was
A lot of
busy, so I'm like,
banter
okay, I'm
back and
gonna
forth.
close it now to get distracted at least until until I finish. Awesome. What other questions do we have?
You talked about the land fund. When you start buying land, what made you decide the best use for that land? Like the best, the highest and best use of that land?
Yeah, great question. We have our specialties, so we need to play with what we're good at. We're not going to do something that doesn't make sense for us. So, over the years, we became the niche developer. We're not doing standard real estate development per se. We're not doing multifamily per se. We partner with other multifamily developers, but we develop BTR and 55 plus. So we're specializing these. We specialize in industrial. So we play to our strengths. That's number one. Number two is we study every market as if it's like a startup business. You should come to our Tuesday calls. Every time we look at a new zip code, then it's a whole party. We're looking at every potential application for that land. And then I'll talk to Marquise and Vipul and everybody chips in and we have different perspectives and we run the numbers and the numbers don't work. And then I'm like, what if we mix this and that? Maybe we do a flex retail in this area. The pricing point determines that. So what's the pricing point of the land? and what's the pricing point of the end product in that market. The velocity determines how aggressive we want to be. Do we want to be way out there, or do we want to be a little closer? For example, when I go to Willis, we were thinking about BTR. Well, BTR isn't going to work in Willis. People are still buying affordable homes in Willis. But we did the math and the research, and we saw that, paying a rent isn't going to save you a lot from paying a mortgage. But we also saw that there's a huge retail opportunity in Willis. So we doubled down on the retail. And then we saw a huge opportunity in Flex. But we saw a lot of retail shops, but zero Flex. So we said, you know what? We're going to build a retail Flex hybrid. We're going to put retail on the front and Flex in the back because that's what Willis needs today. Tomorrow, it's a different story. And so we play these games. It's like, hey, what if, what if, what if? Let's actually prove it with numbers. Let's do the comps. Let's do this. And then we try to combine some ideas together. If one doesn't work alone, maybe a combination would work. But we're always also looking for like who else is developing what, and like, well, that's a cool idea. I didn't think of that. Maybe something that we're doing in Willis will work in Manville because Manville has the same characteristics of Willis. Maybe it will work in Needville. So like Rosenberg, Needville, Manville, and Willis, they're the same in terms of growth. Hockley, North Katy, Tomball, they're kind of the same. Montgomery is different, so like start clustering and you say, you know what, let's maybe do a 55 plus in Friendswood. We're bringing the good old Houston, old money kind of nice town back into life. So again, mixing ideas, testing it, keep testing it, keep updating the data because the data moves really fast. What used to rent for $33 rents for 37 in 2 years. So you just need to stay nimble and you need to kind of do this on a weekly basis.
One last thing, I haven't seen you or heard you talk about the coast. You're not interested on the water at all? Do you do any projects over there?
It's an hour and a half from my house. Um, it's a different city. Water is great. Insurance is bad. Insurance is a problem. Flood is a problem. FEMA just updated the maps. Thank you, FEMA. Everything is 100 years flood right now. And there's some challenges to FEMA and things like that. So insurance becoming a lot bigger of a problem. Although we didn't have hurricanes in Houston, but the Gulf Coast did. Every time we have a hurricane in Tampa, Galveston gets hit, you know. Um, there was a lot of petrochem expansion in the South, not anymore. So that also is a negative. What's happening in Lake Jackson, Angleton, Texas City, on the east side as well, Baytown, etc. It's not what it used to be. So you have a little bit of an economic slowdown and a little bit of insurance and financial dynamics happening. But I'm not against the South where it makes sense. I would love, right now, our focus in the South is where Highway 99 is going to go. It's not too south. It's sort of south of Manville area right now.
Al, one question I had about, I know you were mentioning like the land fund and using land development. Um, if if a person were to invest into a land fund and the fund acquired two or three properties or two or three sites, would that investor be able to also participate in some of the rollover for phase two or vertical construction? Or is the fund primarily just the land to the sale? You know what I mean?
Yeah, it depends is the easiest answer. Typically, the fund will only engage in land development activities, and then we're going to sell these properties into vertical developers. It can be one of us, one of our projects if we like the land, but generally speaking, it would be for sale to other developers to pick up. But there are certain ways that we can work with the investors, obviously consulting with their CPAs to do it. But anything we do within our own funds, it's almost like 1031s embedded. So you can go from one lot into another one and elect not to get distributions. and continue to gain returns without paying taxes for it into the next one. So we can buy the next lot, etc. But we try to limit the land fund to 3 years, and we're just going to have sequential land funds going forward. So the first one we have is 3 years, whether we buy four and do the full horizontal, or flip two and do some paper entitlement in the middle and do maybe 2 cycles of that within 3 years. It's going to be a mix of both.
Great. Thanks for clarifying.
Awesome. I see, Brendan. How are you getting rental data? Amazing. Um, Correct. So the public data is not that great. CoStar is great to everything except residential. CoStar is expensive. That is a problem, but I'll tell you the solution to that. And then for residential, so that the best person to get you access is the unfair advantage when you have the right team. If you have the right agent, they'll do the work for you. If you don't have the right agent, you have to do the homework yourself. Now, obviously, we do both, but we put the agents to work all the time. They send us all kinds of report. They have access to these expensive tools. We don't have to do them ourselves. So build the right team of agents, the right areas, the right asset class. Every agent is different. Any agent who tells you I'm a generic agent, tell them no thanks. They need to specialize. So if they're industrial, we're working with two big brokers in Houston. It's not a secret. It's Lee and Chris, and both of them probably list 90% of the industrial deals in Houston. So if you just work with these two agents, all of a sudden you know everything about industrial in Houston quickly without buying software, without doing a lot of that. But AI is amazing. AI is great in research. If there's anything AI does well, is research. So we can research any market within seconds, within minutes. If you know the right questions to ask, how to follow up with some more refinement, etc. So AI is great. I tend to use Claude more than Chat these days, but Chat is improving when it comes to research. Um, the other day, I've researched a property in upstate New York and knew nothing about the market. And within a couple hours, I was able to suggest an offer to a partner. So yeah, you can go wild with AI, especially in the research comps area, and then use the agents. And then software wise, CoStar for commercial, and there's multiple other ones for like residential apartment data, amongst other ones.
Al, I have a question for you. Great presentation.
Thank you so much.
Just wondering more about kind of next steps. So if we're interested in the land fund, you mentioned owning 1% of, the first round, for lack of better words. What's the minimum buy-in? And what has been your past kind of ROI? What are your returns? And when you're looking at a 3-year fund?
Sure. Great question. Typically in the previous deals, this is our very first land fund. So we've done a lot of land development without having a fund per se. We've done end-to-end projects from the land all the way to building it, leasing it, and exiting. Typical full cycle project yields 80 to 100% return over 5 years when we did the full cycle. When it comes to land fund, it typically yields anything from 40 to 60% within 3 years. So an average of, again, anything from 12 to 18%. The only problem is there's not a lot of cash flow happening. It's only at the sale of these properties. So it's a little bit backloaded. Um, Historically, all of our investments had a minimum of 50K to invest into buying a percentage of the whole thing. We're incentivizing people to come into land. It's a lot less tax complications, so we're actually lowering the minimum to 25K in our first fund. If people invest anything north of 250, we have a different structure that incentivizes them to make a lot more return as well.
Great. Thank you.
Absolutely. Great question.
I have a couple of comments. If I
Thanks.
don't have a background noise, I'm okay with the adhan. Can you guys hear
Sounds
it?
good,
You're
Wes.
good.
Yep.
You're good, Wes. Go
We're
ahead.
good. I wanted to add on a couple of things. There's a ground lease, by the way, retail business. It's a product that is 20 to 25 years old. So as Al mentioned, as a mixed development land site, for example, you can ground lease for a lot of retailers and a single users, mainly restaurants, for example. You can lease for them, do a ground lease only, 50 to 99 years. So you can own that land. Let's say the McDonald's example, he comes and you do a 20, 30 years lease, ground lease with them. And after that, they could leave and go and doze off McDonald's or bring Wendy's or bring Chick-fil-A or bring Starbucks or whatever. So that could be another aspect of that land development down the road that gives really good return for something that you really don't worry about. It becomes just a good income for 20, 30, 40 years without dealing with anything. And that ground lease, it's only appreciate and improves the value. So you lease McDonald's today for $100,000 to $200,000 a year. Look down the road, 20 years from now, you're gonna double, if not triple that lease. So that's another venue of doing so.
That's a great comment, Wes. I did not talk about,
Mm,
a lot of my friends are convincing me, and even the team members have been pressuring me the last 3 weeks to consider RV parks. It's kind of like a different angle to leasing the ground, with putting amenities in the right places. And Texas is so great
yeah,
for RV parks. I've seen truck parking leases. I've seen just parkings in general. There's so many different ways to look at leasing the land, generating some cash flow in the process. Would be open to it. It's just typically those are a lot smaller footprints that
yeah,
are not like our focus right now. But a lot of these great, like, big anchors, when they do these, like, the Walmarts again, or the HEB, they will go sit in a corner and be like, hey, we own all the acreage around us. And now we're gonna ground lease a Jack in the Box, or we're gonna ground lease a Chipotle. And we
yep,
own the land, and it's our anchor, and HEB is not going anywhere anytime soon. And they do it all the time. I think those are going to be opportunistic ideas, Wes, but it's a very solid idea. Yep.
yeah. Another good thing to do, sure.
Great. We appreciate everybody's presence, comments, questions. It's been a nice, lively chat today. We hope you have a great rest of your night, and we'll see you again in May. Have a
Perfect.
good
Thanks,
one.
everybody.
Thank you. Good job.